Hi traders, you are welcome to my video on the best breaker block trading strategy for SMC traders. This is one of the most powerful smart money concepts you can learn, and it gives you a deep look into how institutions move the market. So we are just going to be starting with the basics. Okay, what is a breaker block? Now, a breaker block is formed when price invalidates a previously respected order block. Okay? In simple terms, it is when an order block that once acted as support or resistance gets broken and flipped into a level that signals a shift in market direction. All right? So we are going to be using this as an example. We can see that we had a break of structure here. In that note, we had an order block here that led to that break of structure, right? But now, guess what? This order block was supposed to be respected, right? This is a bearish order block. But instead of it being respected, it got broken and it turned into a breaker block as price came back and retested it, and that initiated this massive bullish move that we can see here, right? So this is the concept that I just explained now. When an order block that acted as a support, or resistance gets broken and flipped, into a level that shows a shift in market direction. So now, why do breaker blocks form? The answer lies in liquidity. Okay, institutions often push price in one direction to grab liquidity, only to reverse it afterward. When this happens, the order block that traders once trusted gets invalidated, and that failed level becomes a breaker block. This is where you would often see strong reactions when price returns to it. Now, let's talk about how to identify breaker blocks. The first step is to find an order block that was once respected. Okay, although in this particular context, this one was not respected before the break happened. All right, but I just have to use this as an example. Okay, or unless if we have to go and start looking for a particular example where the order block was respected. Okay, but for want of time, just know that it's a situation whereby, let's assume that this was respected initially, and after being respected, eventually price now broke above it and now came and tested, then continue going back up. Okay, so you have to find another block that was once respected by price. Then the next step is to watch how price behaves around it. If price pushes through it with conviction and completely invalidates it, that is your breaker block. The third step is to mark the zone. All right. Step 3 is to mark the zone and observe how price reacts when it comes back. So most times institutions will revisit this level to continue in the new direction. One of the most important things to understand is how breaker blocks differ from normal order blocks. While order blocks represent areas where institutions enter the market, breaker blocks represent areas where those original orders failed and flipped. This makes them excellent signals of reversal and market structure shifts. Okay, breaker blocks also work hand in hand with liquidity grabs. For example, the market might sweep equal highs or lows, invalidate the order block around that area, and then form a breaker block. This sequence shows you where liquidity was taken and where institutions plan to move next. The strategy becomes even stronger when combined with market structure. If you see a breaker block aligning with a higher time frame structure shift, for example, our analysis was done on the 30 minutes time frame. So now let's go to 4-hour time frame. If your analysis, corresponds with a structure shift on the higher time frame, that adds even more validity to it. For example, you can see on the higher time frame there was a structure shift, right? You can see that this bearish trend line was broken. Bearish trend line was broken, and then you can see the price came to even retest this bearish trend line. So that also, corresponds with this this break and this retest. All right. Okay. So you have to pay attention to the higher time frame market structure. All right. That's a strong indication that price will respect that breaker block. The more confluence you can find, such as liquidity sweeps, fair value gaps, or external range liquidity, the more powerful your breaker block setup becomes. Okay. So now to recap, a breaker block is formed when a previously respected order block gets invalidated. It signals a shift in market intent, often created by institutional liquidity grabs. You can trade it by marking the zone, all right, watching for price to return, and aligning it with market structure for confirmation. Okay. So if this breakdown of the best breaker block trading strategy for SMC traders helped you understand breaker blocks more clearly, make sure to hit the like button, subscribe to the channel, and turn on notifications so you don't miss future smart money concept tutorials. Meanwhile, ensure that you always practice good risk management. Okay, even when you are trading breaker blocks, make sure that you always prioritize good risk to reward ratios. Okay, if you want to enter a trade, first of all, calculate your risk. You know, calculate your potential reward and know if if that trade is worth taking. I advise a minimum risk to reward ratio of 1:2. Okay, so pay attention to your risk management. Now, the more you study breaker blocks in historical charts, the easier it will be to spot them in real time. They are one of the clearest footprints institutions leave behind, and mastering them can transform the way you see the market. Thank you for watching, and I will see you in the next video. Happy trading.